from Faculty of Management Studies, Delhi University in the year 2009. Practicing as Chartered Accountant mainly in the field of direct taxes, he was nominated by the Government of India as member of the task force for redrafting the Income Tax Act and new Income Tax Law, and the report thereto was submitted to the Finance Minister on 18/8/2019. He has written various books and addressed national and international conference. With this brief introduction, I present before you CA Dr. Girish Ahuja. Over to you, sir.
Of course, the chairman of Bengaluru branch also, Srinivasa T, CA Srinivasa T ji. The other dignitaries sitting in front of me, because some are still there outside. Ladies and gentlemen. Well, friend, let me take you to the old law, section 45(4). At that particular time, if you remember, what was 45(4), that if there is a distribution of asset at the time of resolution or otherwise by a firm or by AOP to its partner or the member of AOP, then it was supposed to be taxed, and for the purpose of computing tax, we had to take the fair market value of that asset. The problem at that time was dissolution or otherwise. Nothing was given what is the meaning of otherwise. Normally, if there is a word used after dissolution, it should take color from dissolution only, and the reconstitutions or retirement should not be there. There was a lot of dispute about that. Second, what we had been advising our clients were that if you have to make any retirement, you revalue the asset 1 year before. And after revaluation, you credit your capital accounts, and when a partner retires, let him take his capital, and there is nothing, no tax liability will be there. These were certain practices which were being done, and there were a lot of dispute. Suddenly, Finance Act 21 came out with 2 amendments. One was insertion of 9B section, and the second was substitution of section 45(4) with the new section 45(4). Initially, it appeared to be very simple. But later on, when the guidelines came, people have gone mad. What kind of a amendment has been brought in this case? I will explain to you. Some people think 9B is a charging section. Absolutely not. 9B is not a charging section. 9B is talking about only deemed transfer. It is not a charging section. It says it's a deemed transfer and there will be a profit or gain. Let me first explain to you 9B, and thereafter we will talk about lot of things about 45(4), read with, of course, 9B. What is 9B? Before I take up 9B, 3 terminologies are very important which you must know. One is specified person, another is specified entity, and third, of course, is reconstitution. Everybody knows what is dissolution, so they have not specified what is dissolution. 3 points. Specified person, specified entity, reconstitution. Earlier they were using under 45(4) partner of a firm or member of AOP or BOI. Again and again this was used and it was becoming cumbersome. Now they have used the word specified person and used it there, and the meaning of specified person has been given in the explanation. Specified person means either partner of the firm or member of AOP or BOI, as the case may be. So there is no need to use again and again partner of a firm or member of AOP. We have given the definitions elsewhere. Another was specified entity. Again we were using firm or AOP, BOI. Now they have used the word specified entity in the section and given the explanation. Specified entity means a firm or AOP or BOI, as the case may be. These are the 2 words used. Now coming to a most important point. They have not given the definition of dissolution, but they have given the definition of reconstitution of the specified entity. What is reconstitution? They have said one or more than one partner retire, but the firm continues. One or more than partner or AOP, whatever, specified person retire, one or more than one specified person retire, and the specified entity continues with that business. What does it mean? Meaning, we are right, even if somebody is retiring, maybe one, maybe two, there must be at least two partners or two members which will continue with the firm. If there is going to be only one left, it is not a reconstitution, it will become a dissolution. So if one or more than one retire, but the remaining partners or members continue with the specified entity, it is a case of reconstitution. Second case of reconstitution, some of the partners are admitted and some of the partners retire during the year, but firm continues with the business, or AOP continues with the business. This is also called admission as well as retirement. This is also called reconstitution. Third case of reconstitution, no one has retired, no one has been admitted, but there is a change in the constitution. What kind of a change will be there when nobody is retiring, nobody is joining? The change will be only change in the profit sharing ratio. There cannot be any other change except the change in the profit sharing ratio. They said these are the three kinds of reconstitution. Now I am coming to a very important section. 9b will give you a different picture. When I come to 45.4, it will give you a different picture. What does 9b says? Each word is very important. Please note, where a specified entity you know, can be a firm or AOP BOI. Where a specified entity receives during the previous year any stock in trade or any capital asset from the specified entity, specified person receives during the year some stock in trade or capital asset or both from the specified entity in connection with, number one, dissolution of the specified entity, or in connection with the reconstitution of the specified entity. Please note, 9b includes both dissolution or reconstitution. This is what is given in 9b. It can be either dissolution or can be reconstitution, and at the time of that reconstitution, some person or some specified person receives stock in trade or capital asset or both. The language is, then specified entity shall be deemed to have transferred. Specified entity shall be deemed to have transferred that stock in trade or capital asset to the specified person, and profit, and it will be treated as transfer of the previous year in which that stock in trade or capital asset or both are received by the specified person. What I am saying, that there is a dissolution or there is a reconstitution. At that time, the firm, let's take the case of a firm, specified entity, let's say firm, gives some stock in trade or capital asset or both to a person or a partner who is retiring, reconstitution, or at the time of dissolution they are giving. It is saying it will be a deemed transfer in the hands of this specified entity. Transfer in the hands of the specified entity deemed, and it will be transfer of which year? Previous year in which that asset is received by the specified person. And then it says, any profit or gain arising from such deemed transfer shall be taxable in the previous year, taxable in the hands of the specified entity in the previous year in which such asset is received by the specified person. That is not important. Then what I say, profit or gain chargeable to tax shall be taxable either under the head profit or gain from business or profession or under the head capital gain. Please note, if at the time of dissolution or reconstitution, you are giving any stock in trade to the person who is retiring or to the person who has gone out of the company. If you are giving anything, that says if it is stock in trade, it will be a business income covered under section 28. And if it is some capital asset, it will be taxable under section 45(1). Please note the word 45(1) and not 45(4). 45(4) is separate. 45(1) has to be there whether it is a dissolution or it is a reconstitution. He said, how would you calculate business income and how would you calculate capital gain? Very simple. Fair market value of that stock in trade shall be taken as a deemed consideration, and fair market value of the capital asset will also be taken as deemed consideration. I take a very simple example in this manner. Suppose X retires from the firm or the firm is dissolved. X is a partner. He is given stock at the time of retirement. The cost of the stock is, let's say inventory is 10 lakh. Market value of that inventory is 11 lakh. So first, when he is receiving that stock in trade, there will be a business income 11 lakh minus 10 lakh, 1 lakh taxable under the head profit or gain from business or profession. Clear, sir? Absolutely no problem. Profit or gain from business or profession will be 1 lakh. Coming to now, suppose there was a land. Cost of the land was 2 crore. Index cost of the land, let's say, is 3 crore. Index cost. And the stamp duty value of the land at that particular time is, let's say, 5 crore. So there is going to be a capital gain taxable under section 45(1) in the hands of the specified entity. How would you calculate? Stamp duty value 5 crore minus index cost of acquisition 3 crore. Long-term capital gain, when I'm using index cost, obviously it is long-term capital gain. Long-term capital gain 2 crore. The firm will have to pay tax, one on 1 lakh under business head, second on capital asset land under the head what you call capital gain, long term. This is either dissolution or reconstitution, absolutely no problem. There is going to be tax both under 28 and also under 45. 28 is only when stock is given, 45 is any capital asset is given. So simple it appears to be. So simple it appears to be. Let us come to now section 45(4). Please give attention to the language of 45(4), very much similar, but some changes are there. Notwithstanding anything contained under section 45(1). We have already done 45(1). We have already done. When we have given some asset to him, 45(1) is there. Whether it is dissolution or reconstitution, it is already there. But now listen, notwithstanding anything contained under 45(1), if a specified person receives during the year any, please note the word, money or capital asset or both. He receives the money or capital asset or both. Who receives? Specified person. In connection with reconstitution of the specified entity. Please note here, there is only one word, reconstitution of the specified entity. Under 9b, there were two words, either dissolution of the specified entity or reconstitution of the specified entity. So we have already done that. He has retired and we have paid tax under long-term capital gain as well as on specified entity. Now this man has received land. You have noticed land worth 5 crore. This man has received, let's say, money 50 lakh. 3 crore 50 lakh he receives from where? This specified entity. What time? At the time of reconstitution of the specified entity, he has received 3 crore 50 lakh. It says it will be a deemed transfer liable to capital gain in the hands of the specified entity. Again, specified entity. How would you calculate the capital gain? They say A is equal to B plus C minus D. Very important. These days in income tax, we have started doing mathematics and equations. Earlier we used to use language, text, and text was becoming difficult. Now you will find in every act, now A is equal to B is equal to C, A is equal to B plus C minus D. What is A? A is capital gain, which can be long term, which can be short term. We will do that. Is equal to B, sum of money. What is the money we have given? 50 lakh. Am I right, sir? 50 lakh. Plus the value of capital asset. What is the value of the capital asset? Is 5 crore. So total amount received by him is 5 crore long-term capital asset, on which long-term capital gain tax already paid, on which if stocks was also given, business income already paid by this specified entity. So 5 crore 50 lakh is the amount which the person is receiving, minus capital outstanding. Now if his capital outstanding is 5 crore 50 lakh, there is absolutely no capital gain. 50 plus 5, 550, minus capital outstanding, 550, absolutely no capital gain. Suppose his amount given is 550 and capital outstanding is 6 crore. No capital loss, they said, no capital loss. We will not charge any, we will not give you any benefit of capital loss. 550, outstanding was 6 crore. It is your choice. Why did you give him less? Because the firm is not being affected, so no question. Now the question is, now please try to understand. 50 plus 5, 550, and his capital outstanding is 4 crore. The capital gain will be 1 crore 50 lakh. 1 crore 50 lakh. I said this. The reason is, if his amount outstanding was 4 crore, why did you give him 5 crore 50 lakh? Tell me that. If his capital outstanding was 4 crore, why did you give him more than 4 crore? If you give him less than 4 crore, we have no problem. No, sorry, 550, and amount is 4 crore. If you give them less than 4 crore, we have no problem. Why did you give him more than extra amount of 1.50 crore when his outstanding was only 4 crore? The answer may be, sir, he is asking for goodwill. If he is asking for goodwill, there is a capital gain. Which capital gain? I will tell you. Sir, he is asking for a depreciable asset in the form of intangible asset, although it is being depreciated under income tax, but the value of that intangible asset has gone up. It may be trade name, it may be a brand name, it may be anything. It's the value of that intangible asset has gone up. He's asking for the share in that intangible asset. And that's why we are here. So there may be another assets, there may be a remaining asset where the value of the remaining assets are appreciated. And he says, look here, I am retiring. I want the percentage of appreciation because I have also right to receive that application. Are you getting my point? What are they saying under 45.4? 9B 45.1, that is over. Now he is asking, sir, my capital is 4 crore, but I want 5.5 crore. The reason is obvious. It is either goodwill, or maybe intangible asset value, or maybe appreciation in the remaining asset which are lying with the specified entity. Please give me a percentage of that because I am retiring. The law says that amount is taxable. Whether will it be a short-term capital gain or a long-term capital gain? He said, wait, Rule 8AA. Rule 8AA says if you are giving that amount on account of goodwill, appreciation and goodwill, it will be a short-term capital gain. If they are giving this amount on account of a depreciable asset, that is an intangible asset whose value has increased and he wants share of that, it will be again a short-term capital asset. And if you are giving that amount on account of the remaining asset, which may be short-term as well as long-term, if it is on account of short-term, it is a short-term capital gain. If you are giving on account of long-term capital asset, it will be long-term capital gain. You will have to work out whether it is short-term capital gain or long-term capital gain or both. But wait, it appears to be very simple. First, you will have to calculate his capital outstanding. How would you calculate his capital outstanding? He is retiring, let's say, on 1st of October 2021 or 22, let's say, let us say 1st of August 2022, he is retiring. Will he not ask for the profit up to 31st July? April, May, June, July. He will say, give me the share of profit up to 1st of July. Although I am retiring, in income tax, the assessment is done on the firm and not on you. There is no need to prepare two balance sheet. It is only up to 31st March you will pay. But wait here, I want profit up to 31st of August since I am retiring. Let's say my share is 40%. Please give me share of profit of 40% as I am going to go out of the firm. One. Second will be, sir, you have earned profit on the sale of stock in trade to me. Stock in trade to me. The firm has earned profit of 1 lakh. Am I right or wrong? 11 lakh minus 10 lakh, 1 lakh is the profit on the sale of what you call inventory to him. You treat it as sale. Sir, I want share in that also, because that is also my profit in not only your profit. Then, sir, there is a capital gain on the asset which I have taken. Please give me the share of that profit also. Please give me the share of that profit. And also give me the appreciation of the remaining asset. Or give me the share in the goodwill. Or give me the share in the intangible asset appreciation. Are you getting my point? Now it is becoming cumbersome. Suppose his opening capital is 3 crore. 3 crore. 1st April 2022, 3 crore. You have earned profit up to 31st August. Let us say 50 lakh up to 31st August. Will you not ask him, on 50 lakh we have to pay tax? And let us assume, ignoring surcharge anything, the tax is 30%. On 15 lakh, tax will be 30%, 15 lakh. So what is left is 35 lakh. Am I right, sir? I have no paper with me. You have to write down and let me tell you what is the figure. 35 lakh. 40% of 35 lakh is my share. So give me 14 lakh rupees as a profit up to 31st August 2022. Am I right, sir? How much profit? 14 lakh after paying tax. I have ignored the surcharge as well as I have ignored the other point. 14 lakh. Okay, sir. I'll give you that. Now he's saying, you earned a separate profit on 1st of August by giving me share, a stock whose value is given is 11 lakh, cost was 10 lakh, 1 lakh is the profit there. I also have a right in the profit of that 1 lakh. Yes, you have a right. On 1 lakh, pay the tax first. It is business income. Let us assume the tax is 30%. So on 1 lakh tax is given 30,000, balance profit on the sale of stock or transfer of stock to the is 70,000. He says, give me 28,000. Because I also need the profit on the stock which I have taken. You have given me at 11 lakh, but the cost was 10 lakh. And on 1 lakh, there is a tax which you have to pay. Pay tax 30%, but balance 70%. Please give me 40%. So he's asking for 28,000. Clear, sir? So 3 crore plus 14 lakh, if I'm not wrong, 14 lakh, and 28,000, 3 crore, 14 lakh, 28,000. Clear, sir? Wait. Now he's asking that there was a capital gain on the land which you have given it to me. Give me the share of that also. I'm also the part of that. You have given it me at the market value, but what is the profit on that asset? I also need profit on that 40%. Give me that. Sir, how much was the profit? How much was the profit from that sale of asset? What was the figure? I said, how much was the profit? 2 crore. Absolutely wrong. Profit was not 2 crore. Profit was not 2 crore. It was capital gain which was 2 crore. Profit was not 2 crore. It was capital gain which was 2 crore. Am I right or wrong? The profit is 5 crore minus the cost 3 crore. Am I right or wrong? Please try to understand this point. Capital indexation is only for the purpose of taxation. For the purpose of accounting, there is no term called capital gain. There is a term called profit on the sale of asset. Am I right, sir? Profit on the sale of asset. What is the profit on the sale of asset? 3 crore. 5 minus 2 crore is the cost, 3 crore. On 3 crore, what is the tax? How much is the tax? Make it 20%, ignore surcharge. So how much is the tax? Tax is on 2 crore. Tax is not on 3 crore. Please, tax is not on 3 crore. Tax is on 2 crore, although the profit is 3 crore. Tax is on, how much, sir? 2 crore. How much was the tax? Let's say 80 lakh, 40 lakh. On 2 crore, tax is 40 lakh. How much left, sir? 1 crore? No, sorry, 40 lakh is the tax. So what is the profit, my share of profit? 3 crore minus 40 lakh. Am I right, sir? 3 crore minus 40 lakh, we will commit mistake. But we will always say the profit is 2 crore, profit is 2 crore, profit is not 2 crore, it is capital gain which is 2 crore, profit is 3 crore, and the tax is not on 3 crore, the tax is on 2 crore. Tax is not on 3 crore, tax is on 2 crore. So tax is 40,000, let's say 40 lakh, assuming no surcharge, no education tax, 40 lakh. So 3 crore minus 40 lakh, 2 crore 60 lakh multiplied by 40%. He is asking for 1 crore 4 lakh. Am I right, sir? 1 crore 4 lakh per profit on the sale of asset. You treat it as a sale, deemed sale. 28,000 on profit of what you call inventory, and of course 2 crore his initial capital plus 3 crore plus 14 lakh was his profit. So 3 crore plus 14 lakh, 3 crore 14 lakh plus 28, 3 crore 14 lakh 28 plus 1 crore 4 lakh. How much it comes to? 4 crore 4 crore 18 lakh 22. Easy, right? I have no figures with me. I will repeat. That was 3 crore plus 1.04, 404 plus 28, 432 plus, what is that? यही है, 432 आ रहा है. 4 crore 18 lakh 28,000. Assuming he is correct. I don't know. Assuming he is correct. 4 crore 18 lakh 24,000. Please give me 11 lakh. You have taken the stock. Give me 11 lakh. You have taken the stock. Will I not recover 11 lakh from him? He has taken the stock. Please give me 11 lakh. So your capital outstanding is 4 crore. Please deduct the 11 lakh. 11 lakh, after all, I have to recover from him. Capital outstanding is 4 crore, whatever is it, the figure. 4 crore 7 lakh 28,000. Why did I give him 550? Why did I give him 550? I should have given him 4 crore, 11 lakh, whatever figure is this. Why did I give him 550? Give me the reasons of giving 550. Sir, goodwill. Okay. Take the goodwill. We will give you, but it will be a short-term capital gain. If the entire amount is on account of goodwill, it will be short-term capital gain. Whatever entire amount, let's say later the balance amount is 1 crore 20 lakh, we will check what goodwill you have given, okay. It is short-term capital gain on 1 crore 20 lakh. It's not a long-term capital gain. But wait a minute. You will have to get the valuation done for this goodwill and fill up form number 5C. 5C, because he is taking 40% goodwill. He is taking only 40% goodwill. And you know that goodwill will be a short-term capital gain, but you will not be allowed any depreciation on goodwill. Goodwill is not subject to depreciation now, even if you purchase it. So they say 1 crore 12 lakh, let us assume 1 crore 14 or whatever 12 lakh, you pay tax on that as short-term capital gain. Who has to pay tax? Who has to pay tax? The firm has to pay tax on that. Sir, it is not for goodwill, it is appreciation in the intangible asset. I had a brand name, I had a trade name, I had a license, I had this type of a thing. It is appreciation. And it is a depreciable asset. You are taking the appreciation on the depreciable asset. Please note, it is also short-term capital gain. Calculate with the help of the valuer certificate, it is also short-term capital gain. If it is only for what you call appreciation in the intangible asset, short-term capital gain. And look here, although it is a short-term capital gain, you will not be allowed any depreciation on the price which you have paid in the appreciation of depreciable asset. No. You are not going to get depreciation on this asset because you have paid no depreciation. Depreciable amount will remain the same, but whatever appreciation you have given, we will charge tax on that. And it will be short-term capital gain. You are now getting confused. Third, sir, wait, it is for land. There are lands which are appreciated, the balance land or balance asset, which is appreciated, maybe some shares, it is appreciated. We are giving for that 40% to him. Tell me, which asset is that? Short-term or long-term? If it is long-term, long-term capital gain. If it is short-term, short-term capital gain. If it is both, partly short-term capital gain, partly long-term capital gain. But you have to tell me what kind of an appreciation you are looking for, and you have paid 40% of that appreciation to that gentleman. Are you getting my point, sir? It's sounding very simple, it is not. You have to calculate the capital outstanding on the date of distribution. And at the same time, you also have to give reason why so much amount has been paid in addition to his capital. Sir, partly because of goodwill, that much is short term, partly because of appreciation, that is for intangible, that is also short term, and partly because of the appreciation in the land, which is long term. So this is going to be long term. This is Rule 8AB. Rule 8AB says you have to calculate whether it is short term or long term, and you have to fill up form number 5C after taking valuation certificate from the valuer. What kind of an appreciation is this? How much is the appreciation? And you are getting 40%. Still not complete. Income tax is never complete. You know that. In income tax you have section. It is not complete. Under section you have subsection. Is it complete? No. After subsection you have, what you have after subsection? You have clause. Still it is not complete. After clause you have subclause. Still it is not complete. Income Tax Act. After subclause, anyone? After subclause? Hanji? Explanation. He has jumped 2 steps, or rather 3 steps he has jumped. After subclause, because nobody has read Income Tax Act. Nobody has seen Income Tax Act. When we were studying income, in our CA days, we never understood anything and we never bothered to see Income Tax Act. And after becoming chartered accountant, we don't want to see Income Tax Act. Who will read that and who will understand that? After subclause, somewhere it is item. After sub-item, there is sub-item. Still it is not complete. After sub-item, there is provided, proviso. Provided that, first proviso. Provided further that. Provided also that. Again, provided also that. Still it is not complete. Explanation number 1. Explanation number 2. Explanation number 3. You are looking for a full stop. The comma may be after 6 lines. This is our Income Tax Act, sir. Somebody, you will understand when he comes for the charitable trust. 14th proviso of section 1023C says this thing. You know how many provisos under section 10 clause 23C? How many provisos? He may also be not knowing, but I have counted 23 provisos. 23 provisos under section 10 clause 23C. Somebody will say, sir, why are you saying 10 clause 23C? It should be section 10 subsection 23C. Absolutely wrong. Sir, we have heard that after section there is a subsection. It's not correct. I'll tell you that. After subsection, sometimes there is no subsection. There is a clause. You say, no, sir. Section 2, subsection 31, section 10, subsection 10. It's absolutely wrong. I'll tell you why this is. But later, what I'm trying to do, it is written in 14th proviso to section 1023C. It is like this. How will you read this 14th proviso? Is number given there? No number given of 14th proviso, 20th proviso, 21 proviso. How will you find out? You will have to open the act. The first proviso is always provided that. First proviso is always provided that. Understand? Very clear. Provided that. Second proviso is always provided further that. Third proviso, provided also that. Fourth proviso, provided also that. Fifth proviso, provided also that. Sixth proviso, provided also that. Keep on adding also and go on any number of reasons. Like, I thank, normally you say, I thank such and such. I thank such and such. Then you start talking, I also thank. I also thank. I also thank. Similarly, provisos are inserted. 23 provisos, sir. And under third proviso, there are 6 explanations. Explanation number 1, explanation number 1A, explanation 1B, explanation 1C, explanation 2, explanation 3, explanation 4, explanation 5. And then 20, how would you measure the 14th proviso? You will have to put a figure. Provided that, of course, best first. Provided further that, everybody knows it is 2. Now also, put number. First proviso also, third proviso. Next also, fourth proviso. Next also, fifth proviso. Next also, sixth proviso. And that way you will look for 16th or 14th proviso. If you miss one else also, you shift to other proviso. This way you will have to read the 14th proviso. 21st proviso says this thing. You'll go mad. And I said somebody, a very student of mine, I said, yeah, you should read one section every day. You are not reading section. Sir, I will not be able to understand. But you want me to read, I'll read one section every day. I said, please do it. He read one section and he gives me a ring after 3 hours. Sir, what happened? Sir, I have read one section. I said, very good. Sir, it has taken 3 hours. Because no problem. Sir, listen to me. Last time it was written, it is not applicable from assessment year 2010-11. I still do not know whether that section, or do you know whether that section is still applicable or not applicable? So I told him, whenever you read a section, first see the last line. Then only read it, or read the first line. In first line there will be written between this date to this date. Don't read the act before understanding how it is to be read, right? This type of act we have. And they are saying, please note, you are paying appreciation. You are paying tax on the appreciation. Sir, I am paying tax today, but where is the appreciation? There is no appreciation. I said, wait. We will give you this appreciation. When, sir? Whenever you sell that asset for which appreciation has been charged to tax now, we will give you a deduction under section 48 clause 3I. We'll give you appreciation there. I said 3I clause, subsection नहीं बोला मैंने. आप कहेंगे ये क्या होता है? हमें तो यही सुना था सेक्शन के बाद सबसेक्शन आता है. ये जरूरी नहीं है सेक्शन के बाद सबसेक्शन आता है. Sir, everywhere we have said section 10 subsection 1, section 10 subsection 2. It is absolutely wrong. Wherever there is a generic section, heading of the section is common, you don't have subsection there. Subsection always talks about the main section. Clause always talks about the subsection. Subclause always talks about the clause. Are you getting my point? An item talks about what you call the subclause, and sub-item talks about this item. This is the system of reading the Income Tax Act. I said, how can we know that it is subsection or a clause? What is the heading of section 2? Definitions. Is there any one definition given in section 2? There are so many definitions given in section 2. So section 2 does not have subsection. It has clauses. Each clause is a separate clause. Section 2, clause 31, person. Section 2, clause 34, meaning of previous year. Section 2, clause 7. Section 2, clause 9, assessment year, assessee. This is what is clauses. It's not subsection. But he said, sir, we have only read subsection. You have read it because in exam, you just write a section and let him read whether it is subsection or a clause. When we read it, we have to say clause. Section 10, income which do not form part of total income. Is there only one income which is exempt? There are so many incomes which are exempt. Section 10 does not have subsection. It has only clauses. Section 10, clause 1, agricultural income. Section 10, clause 2, share of profit from HUF. Section 10, clause 2A, share of profit from firm. Section 10, clause 10, gratuity. Section 10, clause 13A, house rent allowance. Section 10, clause 14, allowances which are exempt. These are subsection clauses, not subsection. But we always said subsection. It is clauses. Section 16, deduction from gross salary. There are 3 deductions from gross salary. Section 16 does not have subsection. Section 16, clause IA, standard deduction. Section 16, clause 2I, entertainment allowance. Section 16, clause 3I, tax on employment, professional tax. It is not subsection, sir. It is not subsection. Even deduction from house property. There are 2 deductions from house property, everybody knows. It is not subsection. Section 24, clause A, standard deduction. Section 24, clause B, interest on money borrowed. You must have said, yeah, we have heard first time. You might have heard first time, this is our law, and such a complicated piece of legislation. Can you tell me how many sections are there in the Income Tax Act, sir? Any guess? How many sections in the Income Tax Act? Haji? 298. Is he right? He is absolutely wrong. There are more than 550 sections. He says, no, sir. You open the book, it is 298. You are right. You open the book, it is 298. But you are wrong. Section 28 to 44 has been allotted to business and profession. Section 20 to 27 has been allotted to house property. Section 56 to 59 has been allotted to income from other sources. Section 45 to 55 given for capital gain. Am I right? Sections 16, 17 is for salary. 15, 16, 17. If you want to bring any amendment in business income, how will you bring? You cannot go to 45. You cannot go to 27. How will you do? 44 capital A, 44 capital double A, 44AB, 44AD, 44ADA, 44AE, 44B, 44BB, 44BBA, 44BBB, 44BBC. Have you heard that? They're all separate sections, sir. 44D, 44DA, 44DB, all capital are separate sections. Section 35, 35A, 35AB, 35AC, 35AD, 35. What are these? These are all separate sections, sir. There are 255, more than 550 sections in Income Tax Act. Although he is correct, 298. But he has not counted those sections which are with alphabet, capital alphabet. There are separate sections, but there was no space left. Otherwise, go for TDS. It starts from 194, 194A, 194B, 194R, 194S, 194. Come now. What will happen when it is Z? 194Z. Then we will start with 194ZA, 194ZB, 194ZC. This is our Income Tax Act, sir. And then you have been told to calculate the capital outstanding on the date of retirement. It is a big exercise of calculating a capital outstanding on the date of retirement. It's a big exercise, sir. You have to calculate what is the profit up to the date of retirement, what is the profit on account of stock given to him, what is the profit on account of that asset which is given to him, and what is the profit on account of the remaining asset for which you have given in appreciation. Calculate that and then fill up Form 5C. You might sell that asset after 10 years for which you have given appreciation. Losses pay tax now. Whenever you sell that asset after 10 years, we'll give you a deduction on account of the appreciation which you have already accounted for 10 years back. 10 years back, whatever you have accounted for will give you the appreciation. If it is on goodwill, we'll give you appreciation whenever you sell that goodwill. If it is for intangible asset, we'll give you appreciation in the intangible asset whenever you sell it. That time we will deduct from the sale price the appreciation on which tax has been paid. If it is on account of assets, capital asset, meaning short term or long term, whenever you sell those assets, at that time, whatever the appreciation on which tax has already been paid, we will deduct you. Sir, who will do that exercise? Chartered accountants are meant to do that exercise. They are meant to do that exercise. So somebody told me what to do. I said, very simple. Ask him to take whatever is the capital outstanding. If they are brothers, no problem. If you pay whatever is the capital outstanding, there is no appreciation paid, no tax will be levied. So if the outstanding capital is 3 crore 50 lakh, give him 3 crore 50 lakh, there is no capital gain. Then sir, but he is my brother. He will say, give me the appreciation. Please give him a gift thereafter. Gift is allowed to the relative. Please give him a gift thereafter. Absolutely no problem. Because it will not be liable for 56, 210, you will not be attracted. But if you have to calculate this, you will have to pay tax there and then. You will have to pay tax there and then on the amount of appreciation which has been given to him as a part of retirement. So retirement with do tax lag rahe hain. 3 taxes. One is under 28 on account of stock. Second is under 45(1) on account of the asset which is given to him. And third is under 45(4) on account of the excess amount paid to him over and above his capital outstanding. Are you getting my point, sir? This is what is 45(4). There is no question of any double taxation. There is no question of any double taxation. One is you have, as if you have sold the asset to the partner. As if you have sold asset to the partner, pay business income or capital gain. Number 2 is that if you are giving an appreciation of the remaining asset left with you, pay the tax today. Who will pay? Specified entity will pay. You have not to pay. Your cost will be the price at which you are given. Specified entity will pay the tax. on that appreciation part, which can be short term, which can be long term, partly short term, partly long term. And then whatever benefit you have passed on, he will be allowed benefit of that only when that particular asset for which appreciation was given is deducted, sold or transferred. Are you getting my point, sir? So now it has become so complicated that if a person is going to retire, dissolution is not a problem. In a dissolution there is no problem, but retirement there is a problem. Now I am coming to a specific issue, sir. Suppose there are only two partners and one partner dies. And you have written in the partnership deed, in the event of the death of a partner, his legal heir will be taken as the partner of the firm. Now there were two partners, one dies. Will it be a case of dissolution or will it be a case of reconstitution? Are you getting my point? What question I'm raising? There were two partners in the firm. One partner dies. We had written in the partnership deed that whenever any partner dies, we will take his legal heir as a partner. Will it be a case of dissolution or it will be a case of retirement? The answer is dissolution. Because when the partner died, that time who was left with? Only one partner was left with. You have admitted him only after his death, not before his death. So therefore this is a case of dissolution and not a case of reconstitution. Are you getting my point? So I'm advising these days, you should have at least three partners. And even if you have written in the partnership deed, if any partner dies, we will take his legal heir as the partner. Firm will continue at least with the two partners. Now the question is, another point. There is a change in the profit sharing ratio. In CA firm, we normally change the profit sharing ratio day in, day out. Suppose your profit sharing ratio is 60-40. You say, now in future I take 90, he will take 10%. Will there be capital gain? Will there be section 45(4) abstracted? It is a reconstitution. Please note that partnership firm has changed. Profit sharing ratio from 60-40 has been taken to 90-10. Will there be, is there is a reconstitution, will there be liability under 45(4)? Answer is, if you do not make any payment, but just change their profit sharing ratio, nothing has been given by the entity to that person, absolutely no problem. Keep on changing profit sharing ratio, the firm is not affected at all. Because tax is going to be levied on the firm and not on the partner. So even if this partner ratio is changed, but we do not make any payment at the time of reconstitution, absolutely no problem. You admit a new partner with only 10,000 capital and give him 50% share. Will there be any tax liability? Answer, no. No, if he brings only 10,000 rupees and you have given him 50% share and firm has not given anything to any partner, there will be no tax liability. Because it is only when a firm distributes any asset to the partner at the time of reconstitution, then only there is a liability. Admission or retirement without any payment from the firm is not affected at all. What we are taxing is not the individual, we are taxing the firm. We don't mind if there is a change in the profit sharing ratio amongst the partner, if no payment is made by the firm to the partners who are changing the profit sharing ratio. Absolutely no problem. So keep on changing your profit sharing ratio, but don't pay any payment to him through the firm. Koi problem nahi. Absolutely no problem, because you have not made any payment from the firm. It is only when the money and asset is given, there is a capital gain. Now somebody asked me, sir, instead of capital asset, I gave him only money. His capital outstanding was 3 crore. I have given him 4 crore. Who has given? The firm. No asset is given. Still 45(4) is applicable. What 45(4) says? A is equal to B plus C minus D. If there is no C, no problem. B is 4 crore, C is nothing, D is 3 crore, then what is this 1 crore? Capital gain. So there is no capital in the case of money. Don't tell me that. There is a capital gain even if you only pay the money. If that money paid is more than his capital outstanding, there will be a capital. There will be a capital gain even if the money is paid. Don't think that only money or asset both are paid, then there will be capital gain. No. If only money is paid and the money paid at the time of retirement to the retiring partner is more than what is capital outstanding, obviously there will be capital gain, but you will have to tell the reason why this extra money paid to him. On what account you have paid extra money to him? Is it for goodwill or is it for this? And if you don't tell on what account it has been given, there will be a short-term capital gain, firm will be liable to tax, and you will not get any benefit under 48.3. You will not get any benefit under 48.3, mind it. You will not get any benefit under 48.3. You have to be very careful while reading section 45.4. You will have to work out the appreciation for each asset separately, and after working out the appreciation of each asset separately, you will find out how much is the money which is given on account of that to the retiring partner, and whatever is the appreciation, you will have to get it as a deduction under 48.3. If you don't give the reason of giving extra money, they will treat it as a short-term capital gain and liable to tax at 30% as a short-term capital gain. Then don't think that you are going to get the benefit in future under 48.3I. Are you getting my point, what I'm saying? The question is that this 45.4 is really very complicated. While drafting your partnership deed, kindly note, we have most of the time written in the partnership deed, the partnership it has will and it can be dissolved any time. Don't write that now. Partnership at will and it will be dissolved if any partner retires. It is written like that. It will be dissolved if any partner retires. The moment you say it will be dissolved if any partner retires, let me tell you, section 9B read with 28.1 and 45.4 will become applicable. 45.4 will not become applicable. Section 9B read with 28 and 45.1 will become applicable, and you will have to pay tax on all the assets. On all the assets. If you have written that the firm will be dissolved. Normally in our partnership deed it is written, whenever a partner retires, firm will be dissolved. And it is at will, firm will be dissolved. The moment say it is dissolved, it is not a case of reconstitution, it is a case of dissolution. And the moment it is a case of dissolution, kindly note 9B read with 28.1 and 45.1 will be applicable, 45.4 is not applicable. 45.4 will be applicable only when there is a reconstitution. And in the case of reconstitution, two sections will be applicable. One, 9B. Another, 9B read with 28.1, 45.1, and another 45.4. 45.4. Clear, sir? I am leaving this to your floor, to the house now, because I have sufficient time. I am leaving it to you for asking any question on 9B 45.4, and if there is no question on 9B 45.4, any question on income tax. I have sufficient time. You can ask can you give the mic to him if he can ask the question? I have sufficient time. Ask any question on 9B 45.4, and if not, any question on income tax. Please give him the mic. So give her the mic.
Good afternoon, sir. My question to you is, you explained that
You have another mic also?
any money paid by the entity, either in the form of money or stock, if it is paid in the form of money, you have to evaluate for which purpose you are paying, right? If the partner or the retiring person is claiming towards any operating expenditure, for example, he is let his asset to be used by the entity. Till the date of retirement, he is not claimed any rent for that. At the time of retirement, he is claiming the rent to be settled.
That asset belongs to you or the firm?
No, the asset belongs to the partner.
In the books of account, You have not brought that firm as partners capital contribution.
No.
Then what is the way? You may not charge any rent. Absolutely no problem. But when you give that, it is your asset. It is not the firm's asset.
Correct.
When it is not the firm asset, it is your asset. You can take any time you like. But if it is given as a capital contribution to the business or partnership firm, already 45(3) and read with 56(2)(10) has been made applicable. Even if it is not registered in the name of the firm, you can bring a asset into the business of the partnership firm by capital contribution in kind, and 45(3) is applicable. Agreed?
Yes.
The registration may not be done in the name of the firm. Then that asset belongs to the firm, not to you. Once it is brought as a capital contribution, it belongs to the firm, and once it belongs to the firm, whenever there is a retirement or a dissolution, section 9B and 45(4) both will be applicable. But if it is your asset and you are not charging anything on your asset, but you don't realize that section 23 will come into picture, deemed to have been let. Deemed to have been let. If you have given anything to without rent, they will say annual value will be taxable in your hand. Be careful about that. That also is applicable. Otherwise, it is your asset. You may take out that asset. It is not the asset of the firm. So where is the question of 45(4) or 9B? Absolutely no question.
Sir, I've got... Sir, I've got 3 questions.
Right.
Is waiver of debit balance by a partner on...
There are?
Waiver of debit balance by a partner upon reconstitution. So whether that will be treated as receipt in the hands of partner.
One point is waiver of debit balance by the partner. How is the firm affected? You have not taken your money.
Yeah.
Okay. Is there any problem with the firm? Firm is going to get the benefit. Whenever anything is going out of the firm, we want tax from the firm. Whenever you are taking less amount from the firm, we don't want, because who is going to be taxed? Not the partner. It is the firm which is going to be taxed. So if instead of 3 crore, I go out of the firm, take only 2 crore, thank you very much. We are not asking anything to you. The 1 crore is left with the firm, and firm is paying tax on that. So there is nothing. If you pay more than what is due to him, then the entity is going to be taxed.
Fine.
If you pay less, there is absolutely no problem. Even if it is a waiver, there is no problem, because everything is in the firm. Tell me.
Sir, what about this exemption under 54? Suppose there is a capital gain, as you told, and if suppose...
How can you take the
investment
benefit under 54? This is the firm's tax, not your tax. 54 is only for individual HUF. This is the tax in the hands of the firm. Who is paying tax on capital gain?
Firm.
The firm. Firm can take a benefit of 54. Can firm take benefit of 54? It is only individual HUF who can take a benefit of 54, not the firm. So there is no question of 54.
Fine.
No question, sir.
Yeah.
No question.
And
Next.
thirdly, you told me about this depreciable asset,
Depreciation.
short-term capital gain. So under 43
6.
C,
43(6).
money is payable. Money is payable. So
43(6).
whether that FMB can be...
Sir,
now
they have
considered
very
as money is
clearly said that the amount which you have paid for the purpose of this depreciable asset
Yes, sir.
will not be added to the cost of the to the addition to the depreciable asset. It is only at the time of sale of that depreciable asset we will deduct the appreciation at that particular time. We will give you depreciation only on the same.
Okay. One more, sir, interpretation. What it says is receive. The word used is receive. So suppose amount were to be credited in the hands of the partner, in his capital account, and actual receipt does not take place. What is your opinion?
Can you keep the money in the capital account of the partner when he
No,
once he
it will be
retires? Can you keep the money in the capital account of the partner when he retires?
No, what,
It
sir?
will not be a capital account.
It will be shown as a liability.
It is a loan account or a liability account. It is
Correct.
deemed received. In a way you have received and given it as a loan. How can you say it is not received?
Money, nothing is given.
Sir, when you treat your capital as a loan, what does that mean? Is it a capital now? What is it? Loan. First they may bring it 269 D or they get D. They may bring it as a 269 T. How have you taken a loan against the capital? You should have taken by account by check. But even if that is done, it is a deemed receipt. You have, as if you have received it and converted into loan. Sorry, who told you to retire? You don't have money to pay. Who told you to retire? No, this is not your money. By back borrow steal, you have to pay to the partner. Will you leave? Will you leave when you retire from the firm? You said, give me the money, I don't know. Or you take it the loan and pay me the interest thereafter. You will say like that. Give me the loan and pay me the interest thereafter. So that is a received amount. Received does not mean constructive receipt is also receipt. Actual receipt is not a problem. Constructive receipt, it is a constructive receipt. You have, as if you have received it and give it to the firm as, no, it does not remain as capital. Does it remain as a capital? That means it is received. It is received. Okay, sir, any other questions?
Sir, here, sir. Here.
Yes.
Sir, at the time of dissolution or reconstitution, the stock has to be valued.
No, stock is not to be revalued. No. If you give him the stock, or if he asks for the appreciation in the stock, I'm giving it. Point is, stock is always an in. When is he retiring and he is taking the stock, we said give him at market value. But if he is retiring, he is not taking the stock, where is the question of appreciation in the stock? We see, please note the word. In 45 code, there are only two terms. One is money, the another is capital asset. And stock is not a capital asset. Stock is not a capital asset. And in 45, in 9b, read with 28, they say when he receives stock. When he receives stock. If you don't want to give him appreciation, the firm is not affected. If you don't want to give him appreciation, firm is not affected. Ultimately, the benefit will go to the firm. And we are not concerned. You pay him less, are you be affected? If his capital due is 4 crore, we pay him 3 crore, are they getting any benefit? We said 1 crore is with the firm, no problem. Let him earn. So please see from the firm's point of view. Tax is being levied in the hands of the firm, not in the hands of the partner. From firm point of view, if he takes less, all the merry, or more welcome. Take less, it will remain in the firm and firm will pay tax on that. That is the point, sir. Yes, sir, somebody is there.
Hello, sir. If partners are related, family members, whatever, any
If a partner is a relative, then what will happen?
brothers, fathers, son, one family members, any tax planning, gift,
What kind of a tax planning? I've told you, give him whatever is due to him, and thereafter you can make a gift to him.
but you have to pay the tax.
Yes, why do you pay tax?
No, firm. No.
Gift is not liable to be taxed. To a relative, if you make a gift, it is not liable to be taxed. Pay him whatever is due from the
Yeah,
firm,
from-
and pay him the balance of,
By gift.
or baki otherwise.
Okay, that is different.
That I have not shown anything. Otherwise, that way.
Sir, here, sir.
Chaliye.
So section 45.
Did I use any word, sir? Chaliye. Okay.
Sir, here. So section 45(4). Here, this way, sir.
Oh, yes.
Sir, you mentioned that we need to compute the capital balance of the partner. What will be the treatment for the tax payable under 45(4)? Will the proportion
I've
of,
already deducted.
the
on-
tax payable on the capital gain computed under section 45(4), the proportionate share of
The remaining partner will pay.
will that have to be recovered from the partner, because he is a partner when the transfer is happening?
Sir, you are paying extra amount to him. You are going to get the benefit of tax under 48I.
Yes, I am talking about the tax payable on this transfer.
सर वो जो आपने पे किया अल्टीमेट उसका बेनिफिट 48(3)(i) में मिलेगा ना फर्म को. The firm is going to get the benefit of 48(3)(i) at the time when you sell that remaining asset. So there you nothing, no tax is levied on the retiring partner. The firm has paid tax, retiring partner has not paid tax. You cannot recover because he will say whenever you sell those assets, you will get the deduction of that appreciation under 48(3)(i) at that particular time. So the tax will be reduced to that extent. Clear, sir?
Sir, a question here. Good afternoon, sir. Yeah.
So there will be so many.
The question is, there is a view which was there since 87, that without the amendment of section 247, with the definition of transfer, these particular capital gains on dissolution of the firm, etc., can be challenged. What is your opinion on that, sir?
Sir, 45(4) was already there. And 45(4) was a specified section, not a general section. And 45(4) at that time particularly said that there will be a capital. Suppose you dissolve the firm and sell all those assets. Who will be liable to pay tax? The firm.
The firm will be liable to pay tax.
I know. You sell all the asset and give the money to them. And if you don't sell the asset and you give the asset to the firm, it is same as if you have sold those assets. It is same as if you sold. Sir, those cases of retirement, reconstitution, A.N. Nayak has said, Bombay High Court, that it is not covered, but many judgment have said, no, A.N. Nayak has said it is covered. The other has said it is not covered. To do away with that, they have come with section 9B, that with 45.
One more question, sir. If you said there is, if a partner takes less than his capital account, there may not be any tax liability to the firm.
To the firm it is not.
Will it be
56 to 10?
56.
Now he is saying that my money due was this much and I have taken less. Will there be a section 56 to 10 applicable? When is 56 to 10 applicable? When is 56 to 10 applicable? It is applicable to a person who receives that amount. And that person has already said that whatever I receive, I am going to pay tax later on that amount. That's why 56 to 10 will not be. Because tax is to be levied not on the partner, but on the firm. And firm has been said that you will not be allowed any capital loss on account of that. It has said under that, A plus B minus C, D. If A is negative, no. So then 56 to 10 will not be applicable when you are specifically told that loss will not be.
Last three questions.
Sir,
Hello.
sir,
Ladies first, sir. Mike this side. Don't blame me. It is a safe staying. Ladies first, so I have to give the chance to her first. Please.
So this question is on section 45(3) and section 53, introduction of capital, asset in the form of capital by a partner. In that case, it becomes an asset of the partnership firm. Will 5610 be applicable in the other partner's hands?
There is a section called 45(3), which says, where there is a capital contribution in kind by a firm to its partner, I will take only firm, not AOP, etc. It will be treated as transfer. And for the purpose of computing capital gain, the value recorded in the books of account shall be taken as the consideration price. Very good. It was applicable earlier and now still applicable. But with effect from 1st April 2017, when section 56(2)(7) was converted into 56(2)(10), 210 says where any person receives from any other person or person a sum of money or immovable property or movable property exceeding a certain amount without consideration or exceeding a certain shall be taxed. So here, who is getting that money? The partner is getting that money. 50C210 is not partner. The firm is getting that asset. Asset worth 5 crore brought into the business of the partnership firm for 2 crore. Cost 2 crore. Asset worth 5 crore brought into the business of the partnership firm for 2 crore. There is no capital gain in the hands of the partner because it is 2 crore. Value recorded. But it is taxable in the hands of the firm. A person receives, person can be individual, HUA, firm, company, AOP, POI, from any other person or person. Sum of money, movable asset, immovable asset. So it will be covered under 56(2)(10) as per the amendment made from 1st April 2007. Prior to 1st April 2017, that was only for individual and HUA. There was a section 56(2)(7)(a, but that was only for shares and not for other assets. And that's why you have to say that 50C210 is applicable. So you bring it at the market, not at the rest.
sir, the question is,
This side, sir.
Yes, your turn.
Sir, whether share in a profit, share of profit in a partnership firm, is it a capital asset?
Share of profit in the partnership firm is not a capital asset here. See, I told you reconstitution without any payment by a firm.
Yeah.
There is no question of any capital.
Okay. So in the given example, if there are 3 partners, okay, there is a change in share of profit, whether it amounts to reconstitution?
It is reconstitution.
Okay, one partner, because of the reconstitution, he gets paid and debited to his capital account.
If it is get paid by the firm, obviously,
Sir,
there will be,
it'll be
if
just
it is paid by the partner outside, obviously 56(2)(10 will be applicable.
Okay.
Obviously 56(2)(10 will be applicable. If it is given by the firm,
And just debited to the capital account.
what does it mean, debited or credited, I don't understand. Given by a firm to the partner means credited to him, it is given by him. So that is not.
Sir, ABC partner.
Sir, he wants that I should answer the way he wants it.
Sir, not like that, sir.
Not possible.
Sir, if
My
there is a
question
debit
is-
Not possible.
Sir, if the partners withdraw more than the capital balance,
If the partner withdraw more than the capital balance as per partnership act, you may charge depreciation, what you call interest on that. But otherwise, there is nothing in that.
So my-
sir, again I'm asking the same question.
So my question is-
if there are three partners, one partner say withdraws 1 crore.
This is the arrangement between the partners of withdrawing capital or not. The firm affected? We are concerned with that. Is it because of reconstitution? Then it is different. If it is otherwise, हमारे तो debit balance of cash का भी हो जाता है.
Last question.
Hello.
How cash is a debit balance?
Last
Sir,
question, please.
if the capital account, if the
The
capital,
gentleman has not come. You are taking a last question and waiting for him to come. He is supposed to come at 4:30. That's why you are taking last question. I have no problem. But will you give the break of half an hour for that? Maji.
Sir, what happens if the capital account represents a portion of a revaluation reserve which was created in the
Already
earlier
written
year?
there, all revaluation, whatever done are ignored. Already written there that no revaluation, whatever done in the past are to be ignored for the purpose of income tax. It is already given.
Okay.
And no depreciation to be allowed on the revaluation. Already mentioned there under 45(4). Already mentioned. So no question. Ma'am, you tell me. I am not. Has he come or you invite him and we will see.
Sir, section 23 you are telling deemed rent has to be calculated. There is, because of the COVID, there are so many buildings have been
How can
vacant.
What can I do? They have not given any benefit. Because of the COVID, people could not travel outside India.
So
They
it
have
is
not given any benefit
totally
to that.
vacant. Even-
Have they given benefit?
No.
They have not given
that is what-
benefit.
So we have to pay tax on
You
the
have to
deemed-
pay tax.
on the deemed.
But if it
There
is let and was vacant for the
there-
whole
there
year
is-
or part of the year,
Okay.
you can take the benefit of that. It was let and was vacant for whole year or part of the year. If it was let in the past year
Okay.
and was vacant this year, you can say whole year vacant, you give me the benefit under 23(1)(c).
So if further.
You can take the benefit under
Okay, sir.
23(1)(c).
Understood. Sir, further, if it is a commercial property or the.
How does it matter commercial or residential? Doesn't make any difference whether commercial, residential are covered under 22. So there is no difference.
Thank you, sir.
We can
Again, he
take,
wants answer in his according to his understanding.
thank you so much, sir. We can take rest of the questions offline.
Okay.
And we are not used to reading Income Tax Act simply because we are used to read your books as students and continue to read the same thing as professionals also.
Tell you.
And thanks a lot for emphasizing on hierarchy and art and science behind reading any act or section. Thank you so much, sir. Over to Srinivasa T, sir.
I once again request Chairman of Bangalore branch of SIRC of ICI, CA Srinivasa T to present a vote of thanks.
What a fantastic session. It was like a surgical strike. Members were in deep sleep after lunch. When the sir started his speech, it was like firing. After that, entering the crowd, little more interesting. Really fantastic session, sir. We enjoyed a lot. We thank you a lot for value-added session. I request our committee member CA Tuppar to present a memento to the Girish Ahuja sir as a token mark of respect and gratitude.
A huge round of applause for the splendid session and answering all your questions at ease, recollecting every single section from nook and corner of the Act.
Thank you.